morning. Welcome to the Trade Setup right here on Bloomberg Quint Live. I'm Neeraj Shah, and it was a session of recovery. You have to say, despite the fact that it was yesterday's US session. It was the third declining session for the Dow. S&P 500 now is at a 3-day drop, which is of 3%, which is the worst showing since September. And for the month of December, Nasdaq is down 3.6%. Dow is flatlined. It's now up only about 1.3%, but the Nasdaq is down 3.6% for the month of December. So you could argue both ways, that one, that the US markets continue to fall, but two, that from a correction of nearly 2.8%, nearly 2%, and as you can see, there was an intraday recovery out there. There's a bit of a pullback in the US markets, which is actually a really good sign. The futures are in the green, and that should help. I think what also, again, I'm not a technical expert really, but when I look at some of the charts and they show some data, we try to bring it. So look at this S&P 500 chart, and it shows how the index has taken a support at some key moving average right here. It's the S&P 500, and that's taken a support at this key moving average, typically a level from where it has tended to bounce back on a lot of occasions. So pretty interesting. Let's wait and watch. This is, of course, the simple 50-day moving average, which is where it has taken the first support. Let's see if it indeed bounces back. Today, it shows that there's a probability that it will move back in the green or stay in the green, or it's at least the futures are in the green currently. Let's wait and watch if that lasts. It is reflecting in Asia, because if you look at the Asian bourses, I think there is a bit of green on the screen across the board. You're seeing some markets having green. Nikkei is at another level trajectory altogether. The others mildly positive, but positive nevertheless. And similar trajectory for the SGX Nifty as well. May have been up about 100 points or whatever. I think there's a mild bit of positivity. So about, now about 163 odd points, excuse me. So I stand corrected. When I saw it on the sgxnifty.org website, it didn't show such a strong gain, but it's clearly showing some gains. So 164 points. So certainly a bit of a recovery out for us, and which is why I think yesterday's moves, or yesterday's losers and movers and shakers, don't matter as much. Moving straight to the trade setup, I think the upturn in the futures market, US futures, will aid the sentiment in India. Keep in mind though, VIX is elevated. Yesterday, for our markets, for US markets, volatility went up, and it is on anticipated lines. Almost everybody said that volatility will perk up. We've been saying every single time that we'll have a very choppy and volatile time ahead, and it remains a key risk, you have to admit. But for today's session, there is green on the screen, which is a good thing. The Bank Nifty may be ripe for a breather actually, after a 7,700 point fall since the October 25 peak. So that's the real story really, the kind of correction that has happened in the Bank Nifty. And does it take some key supports at these lower levels? So let's wait and watch. FI selling, of course, remains high. The yesterday's level, FI selling was the highest since the 1st of December. DIs bought about 2764 crores. The key thing, viewers, before we get to individual stocks, is to keep in mind a chart that we showed you yesterday. And I'm not showing it today, but I'm just telling you the chart that we showed you yesterday, which showed that how for the month of December, in the second fortnight, the Nifty 200 typically, okay, Virat is a gem. And yeah, this is the thing. This is the chart, right? Just keep this at the back of your mind. It need not repeat, but you have to keep it. You have to give credence to history, that for the last 10 years, every single time this has happened. No saying why this can't happen this time around as well. So just keep this at the back of your mind. That's it. Risk reward, like I said, almost there in terms of extreme fear. But yeah, you could argue that one way or the other, could there be a bounce and could there be a move up? Let's see. I think the next few days will give us evidence of that. Today, there's a listing. MapMy India was subscribed about 154 times. We'll list today. The gray market premiums had collapsed yesterday from the peaks. So it'll be interesting to see how it lists today. Let's see. I expect a strong listing for this one. What about stocks to watch? Well, there are a few that I would love to bring. Some on the back of news, some purely on the back of the corrective move that have happened, especially in the financial space. But start off with Wipro. It's a small acquisition. I'm just starting it off to say that, that 1,700 crore acquisition really doesn't do too much to Wipro. And Morgan Stanley is saying the same, that equal weight rating maintained with the target price of 700. The agile acquisition at $230 million. It services about 31% of the Fortune 100 and 20% of the Fortune 500 companies. Wipro and this company plan to develop together Wipro Cyber Transform, an integrated platform to help enterprises enhance boardroom governance of cybersecurity risks. Key feature, hopefully it works for Wipro, doesn't really move the needle too much. So I just wanted to bring this to you to tell you that if you hear a lot about, oh, Wipro's made this acquisition, it's great, etc., I don't think it moves the needle too much, really. It may have a bounce, really, today. But today, I think if there is a bounce, it's not IT which will lead. It's not FMCG which will do that. I think the trick would be in banks, and I'll tell you why. I already mentioned how such a steep fall, it's near some key supports. Could the bank nifty bounce? Let's wait and watch. The mobile subscription data, TRAI subscription data for October, net addition of 2.8 lakh industry wireless subscribers, which is a flattish performance month on month. There's a decline in the month of September, so may augur well. Certainly augurs well for Reliance Jio. It gained 17.6 lakh subscribers. Airtel and Vi both lost subscribers. That tells you a story about what's happening with Jio and the kind of subscriber addition that it is doing. I was with a few tech friends yesterday, and all of them were saying that when you want to use a hotspot or a dongle, there's nothing that beats Jio. I mean, I don't use either really. I'm just telling you feedback from people who are techies and who are using this because they're constantly on the move. Certainly, people are finding merit with Jio. Let's wait and watch. By the way, Morgan Stanley came out with a note on Reliance. So I'll bring that as well. Overweight rating with the target price of 2925. They say that Reliance Industries' implied valuations are attractive compared to global energy peers, Indian retailers, and telcos. All three aspects. And they believe that with the domestic and global demand across retail, chemicals, and fuel normalizing, an upgrade cycle is in the works after nearly 1 year for Reliance Industries. Could it happen? And if that happens, will the index still sulk when the big boy is not sulking? Let's wait and watch. Some of the stocks which you should keep an eye out for: Rolex Rings. Now, they've entered an MOU with the government of Gujarat for a proposed investment of 1,500 crores. Now, that's large for Rolex Rings. The key is when you hear about capex cycle, right? That companies which are in the capex cycle will benefit, and therefore people say, and we did an interview with SKF, and SKF will benefit because ball bearings are in demand. Now, Rolex Rings is the third level derivative, wherein I think all the ball bearing companies are its customers. And therefore, if the first level companies benefit, which is the equipment manufacturers, in turn, ball bearing companies benefit because they supply to the equipment manufacturers. In turn, companies which supply to the ball bearing companies might also benefit, right? Or will also benefit if that were to happen. Rolex Rings is that kind of a company. But the point is that they are entering into a 1,500 crore capex plan, which is sizable for that company. So interesting. Let's see. It's a proposed investment, of course. Let's wait and watch how the stock reacts, or if it reacts. Shriram Properties, Nomura India Investment Fund bought about 20 lakh shares at 95.53 apiece. And no, this is the third one. I think we've got mixed up here. Okay, so one of them is Shriram Properties, which is this one. The other stock is Aditya Birla Sun Life AMC stock, wherein the director A. Balasubramaniam has bought 1,900 shares. Can we just bring up the stock price chart of Aditya Birla AMC? That's the fourth or the fifth asset management company to be listed, right? There is HDFC AMC, Nippon, UTI AMC, and Aditya Birla Sun Life. So I think 4 AMCs which are listed. Motilal Oswal has the AMC arm too. But Aditya Birla Sun Life, that stock, A. Bala, very popular guest on all forms of media. He's the director of the company. He's bought about 1,900 shares in trade yesterday. So that's the other one that would be in focus. Has corrected quite a bit. 1,900 is not really that big an amount as well. So keep that at the back of your mind. Some other stocks which are in focus and trading below or at February 2020 levels, which is effectively have gone back to the pre-COVID levels. And just look at that list, populated by financials: RBL, Bandhan, Axis, Federal, IndusInd Bank, and throw in HDFC, AMC, as well. There's a Nippon AMC, so the AMC companies, M&M Financial, LIC Housing, and then in HUL as well, which is, I think, apparently raised prices of some key products, detergent products, if I'm not wrong. But these are stocks which are below or at the Feb 2020 levels. Quite astounding that we are below pre-COVID levels for a bunch of these financial names. Banks are going to bounce back. Some of these might also have a bit of a trading move upwards. Be careful if you're trading them, though. Never know when they'll start correcting again. So pick and choose. I think somebody put, I think Unseen Value put out a tweet yesterday that when you're buying any company in this fall, don't buy the fall, buy earnings growth for FY23. If you believe that there are some companies which have gone up post strong earnings growth, you might be safer buying those. Just keep that at the back of your mind. Last but not the least, a chart that stood out for us, when I saw the chart, I thought it was symptomatic of the other effect. Remember, all through we've been talking about how the dips have been bought into, but there's also another phenomenon playing out on the S&P 500, which is that back-to-back big down days are now getting more frequent. You've seen 2 or 3 instances of those in the past 2-3 months, and certainly since November 15th, there have been 3 instances wherein their back-to-back down days are now getting a lot more frequent. So yes, dips are getting bought into, but if one day has a big fall, it's not necessarily that there'll be a recovery the other day itself. I think that's the point that the chart is trying to convey. Let's see if the same happens for India. But for now, today, mandi ki baat nahi karni hai. There is teji on the screen, obviously. So the global markets and the futures markets are looking okay. Be careful if you trade, though. But yeah, for now, at least for today, the sentiment seems to have improved quite significantly compared to yesterday's session. Let's see if this lasts. Thanks so much for tuning into the Trade Setup. Have a safe, profitable day ahead.